Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, a good jobs number this morning triggered another market rally, and we are up 12 on the S&P 500 as I'm speaking right now. We're seeing lower and lower front month future numbers. We're now at about 1870 on the front month future, with the VIX in the 16s today. Hard to believe that just a couple weeks ago we were over 30 on the VIX cash, now having lost almost half of its value in the 16 range right now. What we're seeing in the VIX today so far is a lot of covering, a lot of people taking advantage of the low VIX levels, buying back some of those upside calls that perhaps they'd sold earlier, or perhaps just opening new long positions at much lower levels. The action we're seeing is on the April 27.5 line. We're having a big electronic buyer of those for 25 cents, and on the April 30 line, a big buyer of those for 15 cents. So although we've come lower and lower and lower, people are noticing the speed of which it's happening and wondering if perhaps that speed could be undone the other way, and are buying protection for the last 2.5 weeks of this April expiration cycle at much higher levels than we're seeing right now. Another big trade we had was a customer coming and selling the April 27.5 puts, buying the June 24 puts. They collected $4.07 to do this trade 25,000 times. We had it go up 25,000 times yesterday. It's another play on the low VIX levels, hoping to capture some of the contango between the April and June. The June future is trading about $2.30 higher than April, and they would benefit if we had a higher April settlement than where we're trading right now at 1870, and then a slow move down on that June future, moving their June 24 put further into the money. So a lot of action so far today, people covering April, not a lot of April premium sellers so far today, covering upside. Likewise on the downside, no real sellers there. Jamie Tyrrell with Group 1 Option Monster.